Hello and welcome to our continuing focus on the Budget 2019, the first budget of the Modi 2.0 government presented by Nirmala Sitharaman today. With every budget, it takes a while for all of us, journalists and other policy and budget watchers, to try to decode what exactly the budget is claiming and then match that against reality. So here, just as a starting point, is a quick reality check of some of the big investments and the big promises made in the budget versus what the reality is. And remember, this is all being done on the trot. So if we've missed something, we've got something wrong, please let us know and we are happy to go back and look at the numbers. So one of the big promises that was made is that there's a 1 lakh crore disinvestment target in this budget. But the reality is that government after government keeps missing their disinvestment target. So just this government alone has missed it on at least 2 years, perhaps more. The other promise that has been made is of 100 lakh crore in investment in infrastructure, public investment, government investment in infrastructure over 5 years. Now, where is this money coming from is unclear. But the reality is that according to the economic survey, that the average annual investment on infrastructure is about 7.5 lakh crore rupees. Okay, so this is about 20,000 crores a year. This is 7.5 lakhs is what we actually spend. So it's almost 3 times more than what is actually spent. The other big promise which is being talked up is the 70,000 crores to recapitalize debt-stressed government banks. Remember, already 1 lakh crore has been infused into these government banks by this government over its past several budgets. So the 70,000 crores is certainly welcome, but it's not something dramatically new. The other big promise has been to incentivize electric vehicles, which again is a good move because that's clean energy and that's what we want when you want to move away from pollution. But just remember again that electric vehicles, according to official data, account for less than 1% of all vehicle sales. So that is again something to remember. And we may have one more reality check, which is that 25 crores has been allotted to Startup India. The government wants to give a big push to Startup India. Worth remembering, only 830 odd startups out of the lakhs and lakhs of startups in this country have benefited so far from tax exemption. So there is a lot of good intent, no doubt, in this budget, a lot of promises made, but they also have to be matched against the hard reality of numbers. The other big question that has come up in this budget is about whether this budget is basically a kind of repeat of the interim budget of February. And remember, in this budget, for a change, Nirmala Sitharaman didn't present numbers. She just read out the budget and then all of us have had to go through the budget papers to pull out the numbers. And if you look at the allotment that has come in the budget papers for sector after sector, it's exactly the same as the interim budget. So you look at agriculture, 1.4, 1.4, we can roll through all of these. Rural development, it's the same amount. So as we keep rolling through this, defense spending 4.3 lakh crore, 4.3 lakh crore, health is the same with a slight variation in the budget. Education again is almost the same. Narega, the allotment is exactly the same. PM Housing Yojana, exactly the same. And on we go with Swachh Bharat. And so it seems to be pretty much, when it comes to all these important areas of the economy, pretty much a replica of the interim budget. Okay, so let's open up now to our panel. We have Milind Devra, who's a senior leader of the Congress, joining us from Mumbai. We have Amitabh Kant, CEO of Niti Aayog. Great to have him as always. Ratin Roy, who's the director of the NIPFP and a member of the Prime Minister's Economic Advisory Council, is here. And also, last but not least, Naina Lal Kidwai, past President FICCI, Chairperson Max Financial Services. So, Amitabh Kant, let me just start off with you because, again, as many people have said, that there's some great ideas in this budget, there's a lot of good intent. But when it comes to the actual hard numbers, the execution, there are several questions about whether there are some original policy measures and announcements, or is this just more of the same, raising the question, where is the big push that is meant to power India towards this 8% growth, towards this $5 trillion economy that the Prime Minister has envisioned?
So Srinivas, I think the challenge before the economy was really about ensuring liquidity, getting into the heart of the NBFC issue, raising investment rates in the economy and reviving the animal spirits of the private sector. I think by bringing in 70,000 crores into the banking sector, there's been capitalization, there's been a lot of work around the NBFC, HFC issue,
Yes.
including bringing in regulation through the RBI route, which
Yes.
in the long run I think is good. I think this focus on bringing in about 100,000 crores into the infrastructure sector over 5 years.
Yeah.
But the crux of it all, to my mind,
Yes.
is the focus and reiterating this emphasis with great determination by the finance minister that
Yeah.
this government is going to push for privatization and public sector disinvestment, and also a focus on asset monetization.
So, Amitabh,
to my mind, greenfield investments will take time. And, you know, if you push for disinvestments, you have de-risked projects.
Yeah.
You have projects where private sector can come in, and
Yes.
you will be able to bring in good private sector companies, including on assets through InvITs and REITs like pipelines, grids,
Sure.
towers, etc., like we've done in the case of roads, or like we've done in the
But
case of
Amitabh,
airports recently. So
Right.
private sector comes in, credit flow starts going, and that circle has to start.
Okay, but let me ask you. Okay, but you know, let me just pin you down on some of those points that you mentioned. Like, and I just mentioned this at the outset of my show, that when you talked about, for example, the 70,000 crore to recapitalize government banks, in itself, that's not a very original idea. You've already spent about 1 lakh crore trying to recapitalize government banks. Secondly, when you talked about the 100 lakh crore investment in infrastructure over 5 years, we can't seem to find this number in the budget papers. So I don't know where this money is expected to come from.
So, Srinivas, I think if you look at the breakup, in, you know, you are after all doing 134 kilometers of roads per day. You're doing about close to 34 to 40 kilometers of roads, urban roads every day.
Yes.
You're providing houses. The speed of construction of houses has gone up 10x. You're providing houses to every household. You're providing electricity connection to every household.
Yes.
And you're pushing for cooking gas connections. So
Yes.
all this is a lot of money on infrastructure.
But that's still
and to
coming
my
to-
mind, if you look at the budget papers, there's a huge focus on.
But that's still
there's a huge
sorry, that's
focus
still
on
coming to
non-tax revenue,
7.5
actually.
lakh. By the way, all that you mentioned, infrastructure spending, according to the economic survey, is only 7.5 lakh crores a year. The 100 lakh crore figure means 20,000 crores a year. So that's 3 times as much. So, you know, again,
Yeah, so,
where is this money
have you
coming
looked at-
from? And
have
there's
you
no
looked
mention
at-
of it, as I said, in the budget
You have-
papers.
Yeah, but the your figure of 7.5 lakhs is highly flawed, because you don't look at Manrega money which has been spent on rural roads, etc. At all. You need to include many other heads of account which you've not
It's from the
calculated
economic
for.
survey. So.
What the economic survey talks about is money which has been, but the economic survey is only talking about urban infrastructure. It's
Okay.
not talking about areas like resources for rural roads, etc.
Okay.
But without getting into that, my view is that non-tax revenues really need to be raised up, which is what this budget does. It increases the non-tax revenue by about 28%,
Okay.
so that we can push for, and non-tax revenue means privatization of public sector enterprises and asset monetization.
Okay, let me go to let me get Milind Devra. And Milind Devra, are you convinced by what you hear from Amitabh Kant that look, one can quibble over the numbers, but overall, this is a budget that is oriented towards this big growth push that the government is talking about?
Well, Srinivas, I missed a lot of the audio because the line got cut off, but I heard Amitabh's initial remarks. I would say, and I said this very candidly right after the budget, without trying to score any political points, that there are some positives in this budget, but the fact remains that there are many pain points in the economy today. The investment cycle certainly needs to get kick-started. Infusing capital in banks, which will encourage lending to NBFCs today, which have a very large market share of overall lending to industry, to real estate, is a good move. But there are worrying signs, because while credit offtake has increased significantly in the last year, if you look at actual manufacturing and if you look at factory output as an indicator, it's actually reduced. So what that means is banks are lending money, but that money is actually not translating into production. Now, at one level, that can mean there's always a time lag. Somebody borrows money, a promoter, an entrepreneur borrows money. By the time he or she, that money gets deployed, there takes time. It could also mean that there's a lot of delay in clearances for projects, which is leading to the delay. But the fact remains that if this economic cycle does not get kick-started, you will not be able to solve the unemployment problem. If you don't give more people jobs, you will not be able to boost consumption.
So, Milind,
people will have less money in their pockets to spend.
So let me
ask
you.
Will obviously hurt the investment cycle again.
Let me ask you this very quickly. Let me ask you this very quickly. What do you think that the budget ought to have done to boost the investment cycle, which they didn't? In brief.
Well, firstly, look, India remains a capital-starved nation, and getting foreign capital in is a good welcome move. But the government has to invest the lion's share of capital, and to do that, the government has to increase its tax revenues, its tax to GDP ratio. The government has to have money to spend. Now, for instance, the economic survey talked about the nudge theory economics, which essentially means encouraging honest taxpayers who are large taxpayers to name roads after them, to allow them to get preferred access to tolls and highways. Now, those are good things, but I'm asking a very fundamental question. Today, the government spoke about disinvestment. Today, the finance minister talked about increasing FDI limits in the aviation sector. All of this is too little, too late. It's basically to sell Air India. Why have we wasted 5 years when this government and Modi Sarkar 1, Modi Sarkar 2 had an impressive mandate, was the first government in 30 years in 2014 to have an absolute majority. We wasted 5 precious years in failing to disinvest unprofitable B2C businesses like Air India, BSNL, MTNL.
So you're saying why
continue to squander away taxpayers' money.
So you're
and
saying
as a
why
result today,
reinvent
let
the
me
wheel?
ask a fundamental question. An honest
you're
taxpayer,
saying why reinvent the wheel?
Why should an honest taxpayer be what incentive does an honest taxpayer have to pay tax money? Because in doing so, their money is being squandered away on these loss-making PSUs.
I need to open this up, but let me just get a quick response from Amitabh, particularly Amitabh on jobs, because that's an area which certainly that the government was expected to focus on, but the budget as a whole seems silent on job creation. Amitabh, where are the jobs going to come from?
Well, Srinivasan, Srinivasan, I think the important point for job creation is that the economy must grow. And the focus in this budget is on making the economy grow. That's number one. You can't have jobs without economy growing. That's number one. Number two, there's a huge focus, a tremendous amount of emphasis on the startup and trying to create the best startup ecosystem in India. And thirdly, there's been a huge focus on greater amount of loans without collateral through the Mudra scheme, etc. But fourthly, I think we need to look at beyond the budget. Everything is not in the budget, and one of the big things that is being attempted is the structural reforms in the agricultural sector. And this big push towards major reforms, structural reforms in terms of doing away with APMC, which Agriculture Produce Marketing Control Order, and easing up on the Essential Commodities Act, plus ENAM and many other things, and providing better access of marketing. Those are the areas. But if you look at the fine line of the budget, there's very increased outlay. There's very increased outlay for urbanization, urban schemes. And the real jobs will get created if we push urbanization.
So you're saying, so you're saying it's that rising tide will lift all boats argument. If the economy just grows as a whole, jobs will be created. Milind is shaking his head. I'll come back to Milind. Milind, I'll come back to you in a second, because I do have to also bring in
there's a lot of focus. A lot of focus on other areas like startup, etc.
I need to bring in the others as well. Nainalal Kidwai, Ratan Roy patiently listening. Nainalal Kidwai, one of the ideas from this budget, the expectation was that this is meant to excite private sector, private investment is supposed to come in as a result of this. Do you sense that? Because one of the things, I'm trying to put up some tweets by Anand Mahindra, who has emerged somewhat unusually to be somewhat critical in a nuanced sense of this budget, where he didn't seem to suggest that that was the case. He said, I was hoping that Nirmala Sitharaman will be hitting 4s, but she's taken 1s and 2s. And particularly this tax or the surcharge on what is being called, quote unquote, the super rich, seems to have, he said, that seems to have spooked the market somewhat.
Yeah. Well, some things clearly spooked the market, because the market had, I think, expectations that there would be stimulus and growth, and that hasn't come through. One of the factors may well be that some of the large investors in the markets are the ones that have got spooked by rates which I think are, dare I use the word, usurious, in that it leaves us with a rate which is higher than anywhere in the world, with rates at the 5 crores plus level, which is going to be 43%, up from 36, and for the 2 crores to 5 crores level at 39%. Now,
you're saying that's almost usurious,
well,
those rates.
I believe
so
that
high.
we have suffered from a long time of people avoiding tax. And now suddenly the very logic of reducing tax was to bring more people in the tax net and encourage it. So this is the reverse of that, even if it's under the guise of a surcharge.
Okay.
On the other, I can tell you, for the corporate sector, you look to attract talent, and global talent. Global talent doesn't come readily to India because of pollution and security and all kinds of issues.
Sure.
When they, someone's going to have to bear the brunt of this. Either it's the individual, but more likely it'll be companies that are going to have to bear it in order to attract the talent.
Right.
Because you're going to have to pay the guy X times more in order for him to have in hand what he might earn elsewhere.
Oh, right.
So I think
offset the tax.
Yeah, so I think at the end of the day, we've had a flight of millionaires. I think Ruchir Sharma on your channel has given us a lot of pretty scary numbers there. So people going away to lower tax havens.
Right.
On the other, we want to attract talent.
So you're saying this doesn't...
How much money was this going to actually generate in the full scheme of things? And what it's done is it's spooked the market,
versus the
it's spooked
sentiment.
investors. Yeah.
Okay. Rajan, do you want to respond to that?
Well, I don't think that it is unreasonable for someone earning 15 lakhs a month plus to be paying a 40% tax rate. They'd be paying far higher in the UK, in Scandinavia, and in other countries.
With much better welfare systems.
With much better welfare systems, but these people, let's just look at it this way. This is at the margin. So 15 lakhs a month, boss, your average tax rate, even with this surcharge, will come to about 25%. If somebody in a developing country doesn't have the empathy to pay 3 to 3.5 lakhs, that is 25% of their salary, towards taxes, so that other people can get gas connections, can get other important things, then heck, we need to seriously worry about where we are going.
But it's not 25%.
So I think it's absolutely fine. But unfortunately, if you're looking to raise revenues from this,
Yeah.
Yes.
not going to get much, because very few people, as your audience knows, earn 15 lakhs a month.
Right.
So let's
It's
not
a very,
overblow
very,
this.
It's the
Exactly.
whatever.
So why do it?
It's a tiny sliver, but I think it is important to do it because for legitimate political reasons. There's a lot of anger in this country when people, sort of indulge in conspicuous consumption, when people don't have milk to drink and all that. And therefore, if this is meant to send a signal that the rich have to carry their fair share, however small they are, then I think it's a good thing. If it doesn't attract talent from abroad, well, I'd like to know what sectors those are. I mean, maybe in financial services, but I'm not really dying about...
Your high growth sectors, pharma, IT, where we are Indian multinationals trying to become multinationals globally, you need global talent.
Hopefully using Indian talent and paying Indians competitive PP salaries in their own country. And I think 15 lakhs is plenty.
Indian
15
talent,
lakhs is plenty.
But within Indian talent that has a market offshore, the ability to earn as much with a lot other.
If I could take a 10,000% salary cut to come and work in this country, I'm sure other people can pay a little more tax if they actually have any sense that they want to develop.
Can I just get a quick response from Amitabh? Can I get a quick response from Amitabh on the point Naina raised, Amitabh? Do you, because I think you must have had a chance to see, or if you didn't, Anand Mahindra's tweets, and then you've heard it as well. Is it worth it?
No.
For the whatever amount one earns, not very significant, but the sentiment that it provokes.
Srinivasan, there's a very wide disparity in this country. I mean, if you go to, far-flung areas. There's a
Sure.
huge amount of poverty, there's challenges of education, malnutrition, health, etc.
Right.
So my personal view is charging a little bit of tax on the we're calling them the super rich. I think the super rich also need to contribute to the growth and development of India.
more than the chief of
and to my mind, there's
You
fair
think,
enough.
okay,
He gets a house
you
if
say,
you don't.
you say
CTC is more.
it's justified. Milind, you
CTC
wanted to
7
come in.
lakhs.
Milind Deora.
Yeah, I just wanted to come in on the point about, I've heard for a long time about startups, and I know many of the tech startups. Amitabh and I, in fact, have a lot of common friends who run some very successful startups. Firstly, I think we should put the data out in terms of how many people the startups who qualify under the government startup scheme actually employ. Most of those startups raise equity capital, which is very different from debt capital. I'm saying the government should support new entrepreneurs, new promoters, young people. But today there are so many industries, so many promoters of large companies who may have debt, who may be exposed to a lot of debt, who are extremely concerned about the discourse in our country. And I tweeted that as well. I think that all political parties, not just the government in that sense, even the opposition, we all need to dial down the rhetoric, which is an anti-business rhetoric.
Right.
We need to, as Amit spoke about the animal spirit, we need to kickstart that as well.
Right.
If we don't send out a message now that we want to encourage investment, we want to encourage growth, I fear in the years to come, there's going to be a serious problem on our hands. Not
Okay.
just an economic problems, perhaps a social problem,
Okay.
perhaps a political problem.
Okay.
There are going to be millions of youth unemployed. And I would just urge the government that in addition to focusing on startups, please focus on existing industries also,
Right.
which are exposed to severe debt. Every person who has taken risk and cannot repay their loans
Right.
should not be branded a willful defaulter,
Right.
should not be branded a criminal. If you do that, you will not encourage risk taking in our society.
Okay. Also joining us, Dr. Punita Kumar Sinha. She's a director on many of our top companies. She's joining us from the US. She's an independent director with Infosys, I believe, but she's also someone who's worked in investment. Dr. Sinha, thanks for joining us. Your view on this budget, particularly from the post of where you are, from America, how would the global investment community look at this budget? Would they see enough in this to trigger the kind of investment rush that the government is hoping, or is this more ideas rather than intent?
Well, a couple of things from an investor perspective. One is that the free float is likely to go up of certain PSU companies, and that increases the index weightings of India. And so by all the index funds that invest in India obviously will have to invest more in India because of that. So we'll see some foreign capital flow and purely from a passive perspective. Now from an active perspective, actively managed funds, there definitely been a lot of concern on lack of capex. The earnings growth of companies is, when you meet companies and you discuss their future prospects, from what we used to hear several years ago, which was more like 20 to 25% earnings growth, now companies are talking about 10 to 15% earnings growth. So obviously earnings growth numbers will only improve if companies see more demand and they do more capex. So I think what the budget is trying to do is to improve the health of the financial sector so that the financial sector, the banks can lend more, and that should hopefully improve capex cycle, and the consumer on the other side is also being incentivized to spend at least in the rural areas.
Right.
But the challenge is that the NBFC sector still is in trouble, and this liquidity line that the government has created, if it's not implemented, then nothing
You
happens.
think there could be
and
a
that's
problem?
what we've seen in the last few months, is that the liquidity line that's already been provided hasn't
Right.
even been utilized because the banks are still not being aggressive enough.
Okay. I have very little time, just 30 seconds from everybody, starting with you. Amitabh, are you saying that there is intent here? It's not just big ideas. We are going to see some of these changes because a lot of this has already been talked about earlier.
No.
Very quickly.
Well, there's some good features. One of which is about looking at new areas of manufacturing, also about pushing electric mobility, also about converging Aadhaar and PAN. So there are some very remarkable features of the budget as well.
Okay. Naina?
I think the fact that this government has chosen to tackle the 51% ownership is quite significant. For years, we looked at why this 51%, and now they're saying they can look at coming below 51% in their ownerships.
Ownership of companies.
And in the companies that
Yes.
own the public sector, and within the 51 also define as government-owned companies. I'm reading LIC, SBI, etc.
Okay.
as within the 51, which just gives them a much wider room to play as they look at raising money from capital markets or disinvesting.
Quickly, what's the one big
It's,
idea?
it's been delightful to talk about everything but the budget.
What do you mean? We only spoke about the
We've
budget.
talked about nothing except the budget. What things like from
Okay,
electric
say
cars to
one
vehicles.
big idea in the budget that you thought was that leapt out at you.
That's not what budgets are for. That's what I mean. The problem in this country is that you overload the budget with expectations and then forget everything about everything else. I think the one big idea, if you want,
Yes.
is a sensible taxation policy.
Right.
But that is not going to get you more revenues. And but if the country thinks that the government is not fiscally constrained and therefore overloads expectations on the government and the
Yeah.
private sector doesn't do its part
Yeah.
and expects the government essentially to throw money at it before it acts, then I'm afraid that any big ideas coming from government will not work. So really now the ball is in the other court. It's up to the private sector to step up.
Right.
And actually, if they believe that India is an investment destination that makes
Then they
sense,
should
then find where you have
walk-
to invest and invest.
Okay, and
Government
focus
should not be daddy. I mean, this is we are still having a mixture of a communist and state-led conversation, which
Okay.
is why we haven't talked about the budget at all.
Okay. Milind, quickly, in 10 seconds, any big idea that you thought jumped out from this budget?
I
or
would
didn't?
I would only suggest that no, there were some good ideas. I wouldn't say they were big ideas, but I would only suggest that this government should revisit the era of Atal Bihari Vajpayee, who from 98 to 2004 was a very successful reformist prime minister, and he took forward the work that Narasimha Rao had undertaken as prime minister. After him, Dr. Manmohan Singh took forward that work,
Yes.
in the true sense
Right.
of economic reforms, disinvestment,
Right.
actually kickstarting the economic growth, allowing
Okay.
for entrepreneurs to succeed, for
Okay.
allowing for people to invest, job creation. I think that philosophy should
Okay,
sort
so
of
you're saying that
is
should
what
be
this government
a
should
sort
take
of
forward
return to-
beyond this budget.
Okay. Well, that's it for now. But do not go away because Pranoy Roy is on in a second to look at the budget even more closely in a moment from now. Thanks for watching. Goodbye.